Hey everybody. So I'm making a real estate report for you. This is the third quarter of 2022, and I want to share some statistics with you because I've had a lot of people ask me, hey, what do you think the market's doing? Do you think it's going to crash? Our home price is going to come down? Should I wait to buy? Should we wait to sell? Should we wait to move? Well, here's my answer to that. It depends. It depends on your situation. I'm going to share some data with you so that after you watch this video, you'll have more knowledge to make a decision on, do you wait or do you go ahead and make a move now? So let's start with probably the hottest topic right now, interest rates. Interest rates are up compared to where they were even just a month ago. And I'm going to use the average price in San Antonio as an example. The average sales price in San Antonio is hovering right around 350K. So a conventional loan at 350 with the 5% down payment for 30 years, right? Amortized over 30 years. If you calculate that at an interest rate of 6%, which is best case scenario, 6% for you today, your mortgage would be $2,139. Now that number doesn't represent what your payment looks like with property taxes and homeowners insurance and HOA fees, right? But if you're just looking at principal and interest, a $350,000 loan with a 5% down payment at a 6% interest rate, your monthly payment is $2,139. Let me show you what 1% does. 2 weeks ago, you could have got a 5% interest rate. What would the payment have been? $1,930. So you're already looking at $200 to $300 more for the same house, right? A month or two ago, you would have been in the 4% interest rate. For sure, last year, you would have been in the 4s. $1,733 a month. So with 2% higher interest rates today, a $350,000 home is now going to cost you $500 to $600 more a month just on principal and interest. That's a big difference. So as interest rates go up, your purchasing power goes down. That's just the facts of the business that we're in. If you're looking to put a mortgage on a home, if you're going to buy cash, it doesn't make a difference. But if you're going to finance, you have less purchasing power today than you did last month because interest rates are going up. And I'm going to show you statistics that are also indicating home prices are still going up too. So as homes get more expensive, interest rates get higher, your purchasing power goes down. So just have that in mind. So that's the first thing I wanted to share with you. Now, that's not necessarily a bad or good thing. It just depends because regardless of where interest rates are, if you tell me, Jaime, I want to buy a home, my budget is $2,500 a month. We just got to figure out where you need to move to stay within that budget. And you might find out that maybe you can't move to the area you want to be in. Maybe you can't put your kids in the school district that you're really hoping for. But what I do know today is if you wanted to move, you're going to be in the 6% interest rate. If you wait, I mean, it could be 7%. What does 7% do to your monthly payment? In this scenario, $2,357. So, I mean, it makes an impact. Okay, enough of that. I'll get off of my little don't wait to buy because I seriously think right now is probably the best time to do it before the interest rates continue to go up. They could go down next year. They could go down, the last quarter of the year. I don't know that. All I know is what it's doing today, right now, in this moment. Okay, so I want to show you something else. The second thing is what's going on with the inventory. So if you look at this market conditions report, this is just real estate terminology for what's the temperature of the market. Here's 3 categories that I pay attention to when I'm considering listing a house, selling a house, helping somebody find an investment. This current 3-month prior, that represents the second quarter of 2022. This 4 to 6 months prior represents the first quarter of 2022. This 7 to 12 months prior represents the last quarter of 2021. If you need the months to figure this out, this is going to be December timeframe last year. This will be January to March, and this will be April to June-ish, right? So now we're starting quarter number 3, which we don't have those stats because it hasn't happened yet. But what you do see, if you go back to the last quarter of 2021, the average or the median sold price was 307. The first quarter of this year, that median sold price was up 338. And then the second quarter of this year, it went up again to 348. So prices are going up according to these stats. Now, if you look at the average days on market, here's an interesting number. The last quarter of 2021, houses were selling on average in 74 days. The first quarter of this year, it went up just a little bit from 74 to 79. Now you saw a significant increase in quarter number 2 of this year, 93 days on market on average across the board. So it's taking a little longer for homes to get sold, but that's not necessarily impacting the prices of houses. They're still going up. So that's a statistic. Everybody should know that the houses are sitting on the market a little bit longer. In my humble opinion, the reason the days on market is going up is we've seen an influx of cash purchases in San Antonio from big real estate investment trusts, also known as REITs, companies like Open Door, Perch, Purple Bricks. You can Google, any kind of investment company you want who's buying real estate, they're paying cash. And in some cases, they're buying and holding them as rentals, or they're buying them and painting them and then putting them back on the market. But they're overpricing them so bad that they're just sitting on the market and going stale. And if you think about it, these are multi-billion-dollar companies. They're not in a rush to sell. So they're letting their houses just sit on the market until somebody gives them the number they're looking at. So I think that has something to do with why the days on market as a whole city has gone up. Because if your house is priced right, it's move-in ready, it's going to sell, in my experience, within the first week, maybe the first couple of days. Because the listings I've personally represented, or the buyers that we've represented purchase homes in today's market, they're getting multiple offers the first couple of days. So that really hasn't changed much. It's been like that for the past year, the past 2 years, since 2020. But all this data shows longer days on market, prices are still going up, and interest rates are going up. So if you're thinking about selling, ask yourself the question, am I ready to move in today's market? If my house sold in 30 days, would that pose a problem? And then ask yourself, where am I going to go? Can I afford a home? Well, that's a great question. I want to show you some other statistics, because some of the feedback that I've received from other agents and just clients and friends is, hey, great, I can make an extra 100K on my home, but where am I going to move to? What if I can't find a home? Well, what's happening is more listings are coming on the market. So in today's market, it's almost a perfect storm if you're going to sell and then buy, because you have more options today than you did last month. And let me prove that, because there's a lot of news circling around, the area that there's not a lot of listings. You're going to have a hard time finding. Some of it is true to an extent, but don't just depend on what someone's telling you. Fact check them, right? So if you go to San Antonio Board of Realtors and you look at this infographic, April of 2022, this is what you see: 4,200 new listings on the market. And if you're not tracking this every month, this doesn't mean anything to you, but I look at this every month. Okay. With 4,200 new listings on the market and 4,800 active listings, that's over 8,000 listings available, right? And of that, 3,290 is pending. So if you take out, call it 3,200, 48, there's still over 4,000 homes available. The average price is $395, which is up 20% year over year. So the prices are still going up. The months of inventory is only 1 month. So basically all that means is if nobody else listed a home in San Antonio, these new listings, the 4,260 and the active at 4,800, every one of those houses, and I mean every one of those houses, would be sold in a month's time. That means it's still a seller's market, right? Now the buyers have the advantage of there's houses to pick from. Interest rates are still not terribly bad. If you go back in history, interest rates were double digits for a period of time. I'm talking 12%, 14%, 16%, and higher. So at 6%, it's not crazy bad. It is higher than what it was a couple months ago. It's definitely higher than what it was last year, but you can still afford a home in San Antonio. It might be getting a little harder, but I mean, it is what it is. If you've got to move, you need to know this information so you don't wait hoping that things just come crashing down, because it doesn't look like that's going to happen anytime soon. Even if the market got twice as bad. And what do I mean by that? If this went up to 2 months of inventory, that would numerically mean that the market is now, there's twice as many listings on the market. You would still only have 2 months of inventory. And then even if that went bad and it got twice as bad after it's already at 2 months, you would still only have 4 months of inventory. A seller's market is when there's less than 5 months of inventory. It would have to go through some crazy thing for this inventory to pile up to 7, 8 months of inventory like it was back in 08, 07, 09-ish. It could get there. Nobody has a crystal ball to know exactly what's going to go on, but the data is just not indicating prices are going to come down anytime soon. All the data is really showing that prices are still going up and interest rates are going up. Okay, so I want to show you something else just to give you some context, right? If that was April of this year, what was April of last year? And let me pull it up one more time so you can see that. There was 4,200 new listings that hit the market, 4,800 active, and 3,290 pending. Okay, so let's come back and look at April 2021. Okay, you see that? Let's see if you can put them side by side. In April of 2021, there was 4,092 listings that hit the market. So this year, there's over 200 more listings that hit the market than last year. And last year there was 4,333 active listings versus this year there's 4,800. That means there's 500 more available houses this year than compared to last year. In 2021, there was 3,374 houses pending, meaning a buyer and a seller came to an agreement. Those houses are about to close and exchange ownership. There was more last year pending than there is this year. And then if you look at a little more data here, the average days on market was 36 last year. The average days on market here is 31. Not a big difference there. The average sales price, however, last year was 333 versus the average sales price this year is 395. That's a huge difference. The months of inventory last year was 1.3 months. The months of inventory this year is 1.2. Not a big difference there, but a humongous difference in price, right? And then there's way more listings available now than there was last year. And then the average rent last year was $1,587 versus this year, $1,805. So if you're like, I'm just going to rent another year, you're still paying more money, but worse off. Interest rates are 6% right now, hovering in the sixes. If you were to calculate your return on that rent, your interest rate's 100%. And what I mean by that, you're not getting any of that money back. At 6% interest rate, you're making payments to your mortgage to pay it down, to build up equity. It's kind of like a savings account, right? Versus a rental, 100% of that money, you're not going to see a return on it at all. You're just paying somebody else's mortgage. So rents are high, interest rates are going up, housing prices are still going up. Don't let this discourage you. If you're thinking about buying, the one good thing you have going for you right now, the interest rates are still in the single digits because in the past they were double. The other thing you have going is there's more listings available now. So despite what you might be hearing from realtors, from friends, from the news, there is more listings available today than there was last year. So that's a good thing. If you're thinking of moving, call me, text me, reach out to me, whatever's the easiest thing. I want to help you put a game plan in place so we can help you there. All right, but I trust you like this video. Have a blessed day. I'm gonna let you get back to it. And thanks for watching. Share it with friends and family. If you didn't like it, let me know. If you got some information that I don't have access to that indicates something different's going on in the market, let me know. I am always open to a conversation and hearing new information. All right, have a blessed one.